For this discussion, we will tackle one of the steps in the audit process, accepting an audit engagement. But before that, let us define what auditing means. Auditing is a systematic process of objectively obtaining and evaluating data, statements, records, operations, and performances, financial or otherwise, of an enterprise for a stated purpose. The objective of the audit is to provide reasonable assurance that the financial statements are free of material misstatements, whether due to fraud or error. And to obtain these audit objective, the auditor needs to undergo a structured series of steps commonly called audit process. These normally include the following steps: accepting an engagement, audit planning, considering internal control, performing substantive testing, completing the audit, and issuing a report. Now let's focus on the first step in the audit process. This process would require an evaluation of the auditor's qualification as well as the auditability of the prospective client's financial statements. A preliminary understanding of the client's business and a background investigation of a prospective client are usually performed at this step of the audit. Let's say Ginny was an auditor of Lexi & Company for 5 years. She handles numerous clients in which she provides a quality audit that satisfies them. One day, Archie, an owner of a popular coffee shop, inquired with Ginny to audit his business. At the same time, Lucas arrived and requested an audit of his package delivery business. Ginny is confused about whether to accept the coffee business or the delivery business. Before she gets to decide, Ginny should consider the following considerations: its competence, its independence, its ability to serve the client properly, and the integrity of the prospective client's management. The assessment of the auditor's ability and capacity to perform the activity is one of the main considerations that must be taken into account. This competence can be attained through a combination of education, training, and experience. And in order to assess whether Ginny is capable of meeting the degree of competencies required for an engagement, she should obtain preliminary knowledge about her client's relevant industry, its nature, its selection and application of accounting principles, its objectives and strategies and those related business risks, and its measurement and analysis of its financial performance. Essential to the credibility of Ginny's report is considering the concept of independence. There are two aspects to it: independence of mind and independence in appearance. Independence of mind. This allows an auditor to act with integrity and exercise objectivity. Independence in appearance. The auditor avoids situations that lead others to believe they are not impartial. Take note that in an audit engagement, the Code of Ethics for Professional Accountants requires all members of the audit team to be independent of the client. Therefore, Ginny must assess whether there are any threats to the objectivity and independence team, as well as if appropriate safeguards could be put in place. After making sure that Ginny is independent in appearance and of mind, she must evaluate its ability to serve the client properly. It should consider the size of the business, which will determine how many staff or personnel are qualified to do the engagement. To give you an insight, Ginny has only 5 audit staff, including herself, and 3 of them are already into the delivery service industry. In the given scenario, the package delivery business is far bigger than the popular coffee shop. Let's assume that the package delivery business needs 10 staff, while the popular coffee shop only needs 5 staff. So, Ginny needs to consider her audit engagement in the package delivery business rather than the popular coffee shop, since there are enough qualified personnel in the same industry. Audit firms are required to conduct a background investigation of their prospective client in order to minimize the likelihood of association with clients whose management lacks integrity. First, it should inquire about the appropriate parties of their clients, such as clients' bankers, legal counsel, or underwriters. After knowing the appropriate external parties, it should inquire about the reputation of the business with them. By doing that, it can assess if the client lacks integrity or not. Secondly, the incoming or successor auditor should communicate with and inquire about information from the client's predecessor auditor. However, the auditor should first obtain permission from the management before communicating with the predecessor auditor. After obtaining a client's permission, the successor auditor can ask about the predecessor auditor's understanding of the change in auditors, facts that might have a bearing on the integrity of the client's management, and any disagreement between the predecessor and the client. After knowing the consideration, unfortunately, Ginny has declined to audit Archie's coffee shop business. It could be because of the following circumstances. 1. The financial reporting framework to be applied in the preparation of the financial statements is unacceptable. 2. The auditor has not obtained an agreement where the management acknowledges and understands its responsibility. 3. The client's management could not provide accounting records and documents supporting the amounts and disclosures in the financial statements. 4. The management restricts the scope of the auditor's work in the terms of a proposed audit engagement, such that the auditor believes the limitation will let her disclaim an opinion on the financial statements. Auditors shall not accept such a limited engagement unless required by law or regulation to do so. Now, when do we accept an audit engagement? We accept an audit engagement if the following circumstances exist. First, the management has agreed and acknowledged its responsibilities according to the agreement with the auditor. Second, there is no limitation as to the scope of the accounting records. The auditor has been given enough access and privilege to look at their client's source documents, records, and facilities, and is allowed to communicate with necessary personnel that may need while performing the audit. Third, an acceptable financial reporting framework was utilized in the preparation of its financial statements. And last, there are adequate accounting records to support documents. When inquiring about matters and any facts that indicate the integrity of the management, Ginny consulted with the business legal counsel and bank and found no indication that they lack integrity. She determines that Lucas Package Delivery business indeed possess integrity as a business. Because of these circumstances, Ginny accepted Lucas as a new client and has confirmed that there is a common understanding between her and the management of the package delivery business. Following the acceptance of an audit engagement, the auditor together with the client's management should agree on the terms of engagement, which was recorded in an audit engagement letter. This engagement letter serves as a written contract between the auditor and the client. The purpose of this engagement letter is to avoid misunderstandings with respect to the engagement document and confirms the auditor's acceptance of appointment. Engagement letter generally includes the objective and scope of the financial statements, the responsibilities of the auditor, the responsibilities of management, identification of the applicable financial reporting framework for the preparation of the financial statements, the forms or any reports or other communication that the auditor expects to issue. The fact that because of the limitations of the audit, there is an unavoidable risk that material misstatements may remain undiscovered, and the responsibility of the client to allow the auditor to have unrestricted access to all information in connection with the audit. And when deemed relevant, auditors may also include the following points: billing arrangements, expectations of receiving management representation letter, arrangements concerning the involvement of others, experts, other auditors, internal auditors, and other client personnel, a reference to any further agreements between the auditor and the entity, and request for the client to confirm the terms of the engagement. There you have it. You can now say that Ginny rejected Archie and accepted the engagement with Lucas. The next time you accept an audit, just remember you're in cabin. Thanks for watching. I hope you enjoyed it and learned something new. Please remember to like and subscribe. You can check other videos on this channel to learn more about accounting.